How can I avoid or minimize capital gain taxes on the sale of stocks and mutual funds held for many years? Do you have personal issues with this one, or do you got anything you want to share?
My favorite way of minimizing capital gains is by donating the appreciated stock.
All right, so let's go through this. So long ago, in a galaxy far, far away, right? We had a stock that we bought for $100. It is now worth 101 today. So we have gain. How much?
Of one.
We have of $100.
Oh, you bought it for $1. Gotcha.
I bought it for $1. It's now worth 101. My gain is $100. I would pay long-term capital gains. And that's going to be 0, 15, or 20%. So correct. It's going to depend. So what if it's somebody who makes $30,000 a year?
They're most likely going to be paying it at the 0% capital gain rate.
What if they sold $100,000 of stock? Would it still be 0?
No, because unfortunately that $100,000 goes into that calculation of what bracket you fall into.
Right. So in order to be 0, you're going to have to be in, I think it's the bottom two. It's actually a dollar amount. I forget what the dollar amount is, but actually I may have it floating around here somewhere. Let's see. Do I have other rates? Long term, it's single taxpayer. It's up to 38 grand. Married filing jointly. Let's do married filing jointly is 77,200. So that's married filing jointly 7,200. I pay 0%. Just want to make sure that you understand that. So you can be selling it, and let's say that I have $100 worth of gain. I sell enough to keep myself in that 0%, and I just sell it over years. So that's number one, is to actually understand what tax bracket you're in and how much of an impact that is going to have on you. Let me see if I can. I know there's lots of people asking tons of questions. Oh my God, I've got hundreds of them. We're not telling bedtime stories. All right. The next one is, let's say that we have the $100 a gain. A tax-free way to get to that, let's say that you have lots of gain, is you can borrow. You could borrow against that. It's called a security-backed line of credit. The tax rate on borrowing is 0. So you could borrow against this gain and pay nothing. Third way, which is the Jeff way, is if you have a 501c3 that you either like or is yours, and you contribute your shares, you get a deduction up to, how much of your income can you write off? 60% of your adjusted gross income. You can write off up to 60% of your adjusted gross income by giving those shares, and it's their fair market value. It is not the cost basis. It is based off of your today value. So in English, if I have $50,000 worth of shares that are worth $50,000, my basis is what, $500 or $5,000, whatever it is, 1/100th of that. I don't have to worry about my basis. I get a $50,000 deduction, and I'm limited only to 60% of my adjusted gross income. So I hope that makes sense. Fun stuff.
Yeah, I mean, this is a good way that you're contributing to a charitable cause and getting a deduction for it, not recognizing any taxes on it.
Yep. Somebody did ask, and they're getting a ton of questions. I'm going to just answer a few of them real quick. A 501c3 is a nonprofit. It's where you're making a charitable donation. You do not have to pay tax when you borrow money on a security-backed line of credit. So if I have a stock account worth $1 million, I can literally use it as security, just like I would a house on a line of credit. It's just that they're a lot cheaper. They're about 3% because you're very, very liquid. You don't have to worry about foreclosing on a house. They have your stock that could be sold in about 2 minutes, whereas a house might take months. And then somebody else says it's recorded for review. Yes, you can come back and review these, and these questions, we'll stick them out there in the world. So anyway, so you have choices, and what this really comes down, what it comes down to is you always want to do calculation. This is, I could either sell it in part and recognize some gain, depending on what tax bracket I'm in. I might be as low as 15%. You might say, hey, that's fine. I'll take a little bit of tax hit. You could spread it out over years. You don't have to sell it all in 1 year. Here we are towards, October. So you could wait and sell some at the end of the year now, some at the beginning of the next year to push it into another year.
And something we didn't really bring up about minimizing gain on taxes is a lot of clients still have leftover capital losses.
Oh, you can use your losses against it.
Absolutely. If you've got something with a lot of gain in it, this may be an opportune time to.
And not just your carryover losses, but it could be losses that you have unrealized. In other words, I bought a bunch of Tesla at way up when, okay, that's probably a bad example. We're watching him roll his eyes at me. But let's just say that you have, some unrealized losses. I bought a bunch of GE. It is tanked, and I have $50,000 of losses. And I'm like, this would be when you take it to offset some of your gain. So,
and the stock that you bought for $1, you may really love the stock. You can sell the stock and turn around and buy it the next day.
Yeah.
And still have that same stock. You just
got to watch out. You got to wash out the wash sale rule.
If you sell it as a loss, you're going to have wash sale.
Yeah, you can always have wash gain. That doesn't exist.
They don't mind you paying tax on you.
Yeah, that's tax humor, and we're nerds. All right. So let's go past that. We could spend all day on scenarios there, but I hope you realize that there are options for you. And if you don't want to recognize any gain, you can give it to a charity, and then you just take a big tax deduction. That's the big part. When I give it to the charity, charity sells it 0 tax, and you don't have to worry. You get a big fat tax deduction. It's always nice to give appreciated assets to charity.